Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. We're just going to dive right in, take a look, see what is going on. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, looking for potential investment opportunities and sharing that with everyone in the community. Special is the coupon code if you'd like to sign up, and you can get a discount using that special coupon code. It's just special. Type in special is what I'm saying, for either the monthly or yearly membership. So, a U.S. household now needs to earn 114,000 bucks annually to afford a median-priced home. That's up 70.1% from 67,000 just 6 years ago per Realtor.com. And I think that's a combination of having a shortage of homes on top of an increasing mortgage rate. So it's a combination of those two things that are causing the affordability problem that America is facing at the moment. Coming on down, we'll miss this someday. Don't miss it twice. If you're young and broke like me, this is the most fun you'll ever have investing. Winning is euphoric. Losing is painful. The money still matters. Someday it won't. These are the good old days. Enjoy them while we can. Yeah, there was some pretty crazy stuff going on when I was pretty young, learning how to invest and trying different things. Most people, when they first start out, they jump into penny stocks. They jump into stocks that don't have a high value for some reason. Most people go there. They like the volatility. They think that the low share price will make them more money. It's easier for it to double, triple, quadruple, a whole bunch of different things that are all kind of, it's not the correct view. When I was young, I used to do a lot of swing trading. I would swing trade long and short for the heck of it. There were days that I would use even margin. I would use margin when I was younger, trading and trying to push it. There were times where I made a whole bunch of money. It was a whole bunch of money to me at that time, and it was pretty awesome. It felt pretty good. There were times, I lost some money too, but most of the time I would lose a little bit of money and I would gain, sometimes I would gain a good chunk of money. But I never really made a ton of money over long stretches where I would say it was worth doing all of that. I'll say charting is what I did. It basically was charting. Then I went into more larger positions, holding for longer, um, doing that type of investing, finding just companies that you would randomly see, and then I would invest in those companies that I would randomly see. So the Mastercards, the Visas, the Chipotle's, like the stuff that I would experience myself and use their products. That was highly successful for the recovery phase of real estate. And I didn't know we were in the recovery phase. I knew that we were in a recovery for housing, but I didn't know that the cycle existed. And I didn't know that those stocks benefited from being in that part of the cycle as good as they did. But they worked, and I was luckily there. And I purchased a lot of that in the late 2000s, early 2010s. That was much more profitable. Um, I mean, if I knew the cycle better back then, because I was a brand new investor, I would have made many, many millions of dollars just buying and holding and not doing anything. The people who trade, in my opinion, do not make a lot of money. That most people are unsuccessful. The shorter the duration, so if you day trade, they all get broke. I mean, they all of those people go broke. And as you lengthen it out, the more successful the investors become. The most successful investors, as weird as this is, were Fidelity did a study, and it was actually dead people's accounts that were the most successful, where they didn't actually do anything with their money. They just left it in investments. Obviously, they didn't get scared out of the stocks because they were not around. But those were the most successful accounts were the people who didn't touch anything. They set it, forget it, and just rode. And that's kind of where I've migrated to. I've migrated more towards holding things for longer periods of time and letting the companies and the fundamentals of the companies and the good management teams do what they do best, and that's create value. Whether that's a commodity company or an insurance company or some financial company, whatever it is, doesn't really matter. Uh, the short term, what gets people is that the short term can move for any reason that there is. News release, you could even say sometimes it's being manipulated, maybe, um, with news releases and other things that go on in the short term. But if a company and a business is growing and they are earning more money over time, that's the ultimate driver of basically stock returns. It's earnings per share growth. So I've migrated towards the longer holding period, and I've made a lot of money migrating towards that. And my only flaw is I should hold even longer than what I do, and that would be, I would say, the biggest mistake. I chose all the right companies. I just have to hold things long, super long, and hold them for a very long time. Novelism says smart people talking to other smart people tend to have very short conversations. Yeah, I mean, I guess so. Um, what I like this is what I like to see. If I get an email from somebody, I love bullet points. Bullet points like topic, bullet points. That's it. When somebody sends me, like, I'll just call it verbal diarrhea, where it is incredibly long, I can't stand it. There's so much crap in there that's not needed. It's like, just tell me what you want. Like, if you're going to write me a question in a form that you ask artificial intelligence, and I will be completely okay with that. I don't need an introduction. I don't need all this wasted stuff, and I don't want to read a billion things that I don't need to read. But yeah, this is probably true. Small stock sentiment is always a roller coaster. It goes from extreme bearishness to extreme bullishness. From nothing can go right to nothing can go wrong. From backward looking to forward looking. From low expectations to high expectations. Then it flips in an instant back to extreme bearishness. Villain to hero and hero to villain, the cycle continues on and on. Sometimes a few times in a year, the opportunity is doing the independent work no one is doing in those bearish extremes and to find reality where nothing good is priced in. If it's a business that is growing with decent management and not diluting chances, our investors will come back to it and fall in love with it again. Well, that's true. This game is more about psychology than anything else, and it's about mastering your own emotions. If you can master your own emotions, you find good companies, just follow those good companies. Put them on a watch list. When things get extremely bearish and there's fear in the market, say maybe larger tariff tax increases are released, and things get sold off over time. If you know the company inside and out and you're following it, you can pull the trigger quite rapidly. So you need to know the companies before this event occurs. You can't wait for an event and then do your research. You want to research the companies, figure out which ones are good. Let's just say like there's two or three in a sector that are just amazing. But let's say the sentiment is good around, it's good around them right now. So I would wait until there's fear, wait until there's bad sentiment, perhaps, um, depending on what you consider good. So you do need I'll say some technical analysis background. You don't want to be buying when things are perceivably bad, but still are extended to the upside, is what I'll say. The best locations is when fear exists in the market and you're turning from a downtrend to an uptrend. Like that's the best time to really buy. Um, and it gets a little bit more difficult as you start to establish an uptrend and then you really take off. And when you really take off, especially from a bottom, there's usually a large percent gain. And that's when people start to chase it. And then you get a big, nasty pullback. So people chase it in wave one. And then it creates a wave two pullback. That wave two pullback generally pulls back between 50% and 70%. 61.8% is like the golden level. So that's where people get creamed. They chase into it and then they get that big pullback and it kicks them in the nuts. They sell. And then wave three comes where it really takes off. And then people FOMO back in. It's all about emotion. It's all about controlling emotions and knowing what these patterns kind of look like to some degree. And then you just buy it when things are down and crawling on a bottom. And then you just have to be patient for it to come back into favor. That's it. And then you just do it over and over and over and over. Unusual whales. Investors are better off sticking to a plan and avoiding market timing. I think that's okay for these big companies that just go up and up and up kind of slowly, like insurance companies and food companies and stuff. But you kind of have to time to some degree with commodities and these big cyclical companies. If the commodity price goes down, then the commodity company is going to go down with it. I mean, that's just a function of their earnings and their return on equity and everything. All their metrics are based off the price of the commodity. So your timing is what you use for timing is your valuation of it. Maybe not valuation of the company, but the valuation of commodity in relationship to some other good measuring stick, like oil to gold ratio or silver to gold ratio. You get in when something's cheap and you just sit and then you wait. Meg Energy responds to Strathcona Resources Limited's announcement of an intention to make an unsolicited offer. There you go. Looks like there's some takeover targets heating up in Canada. Coming down, the freedom to do what you want, when you want, with whom you want, for as long as you want, is true freedom. Well, that's true freedom from responsibilities in a system. It's not true freedom. True freedom doesn't mean you can do whatever you want. In terms of the self-made up ethical things that humans create, laws, ethics, whatever it is. So it doesn't mean that that you've got total freedom and that you have disconnected from the laws and rules of society. But yeah, it's true freedom from having money be a problem and responsibilities and decisions that you wouldn't otherwise make because money is not a problem. Action game plan for oil, nat gas, and energy equities. Natural gas will be the biggest beneficiary of the recent oil price downturn. In the near term, we expect prices to pull back further, but we expect summer natural gas prices to meaningfully move higher. That's HFI research there. Let's see this one. Now, there wasn't a ton of good information that I could find today, so a lot of these are kind of, they're quotes and stuff like that. I didn't really see any good information. Nothing really changes that fast, guys. I mean, a lot of people, they expect all this information. They want to hear that silver's going to moon and uranium's going to moon, and I'm sure they will at some point, but there wasn't a ton of good information. And all the charts, if you're a long-term chart guy, I mean, they all kind of say the same thing over and over. So self-made wealthy people use one of these two money strategies. They use budgeting and spend tracking to control spending, or they pay themselves first, automatically invest a portion of income before spending what's left. Both paths lead to wealth. Choose yours and stick with it. I forgot what this is called, but they gave you two options, and they say, well, it's either one or this. I can't remember what that's called. Is that is it they have a name for it. If you know that name, put it in the comment section. I forgot what the name is, but they only give you two options. There's more than two options here, guys. The option that I do, and I'm not saying that I'm the most wealthy person ever, but I just ask myself, do I really need this? Do I really need this? And most of the time, the answer is no. So what I end up doing is I don't really buy much stuff in my life, um, because I just don't think it's going to make my life better. I own a couple of things. I have two cars. Well, in fact, I own three cars that I purchased myself. We have five at the house, but three that I had purchased. And then most everything else, I don't really buy much. I bought I got a TV for really cheap off of a friend that I got. I mean, it was like almost free, basically. Um, there's other things that I have, and there's nothing really that I own that's that expensive and extravagant. But I don't think I need it. That's the thing. I don't strive or want to have that stuff. A lot of people say win Lambo. A Lamborghini is just made out of metal, mostly aluminum, and I'm sure there's some steel in there and stuff like that. That's what all the other cars are made out of too. And really, what you're just driving around is you're driving around, in my opinion. If someone really, really wants a Lamborghini or Ferrari, it's like they're looking for outside acceptance for themselves. And I would almost be embarrassed to drive one of those cars because it's not me. Me is driving a car uh, that is exceptional at something. Like it's an extension of what I look for in the car. So maybe it's a car that has ridiculous handling and it's of good value. And that's just me. It's like an extension of me. I look for value things and has good handling. So, maybe like a used Porsche Cayman would be a fun car, or Mazda RX-8 or a Honda S2000. Those are just exceptional values for what they are. But when you break it all down and you start to break these cars apart, and let's say you tear them apart and put them back together, you'll know what good engineering is. You'll know who did their homework. RX-8s that you can buy for basically nothing come with aluminum control arms. They come with a double wishbone suspension in the front and independent in the rear. Uh, and most other cars, they did cost cutting measures and they put McPherson struts on it and stuff, which isn't as good because it's a inferior design in my opinion. They did it for cost cutting measures. And then you go look around at some of these cars that are super expensive. Porsche is one that has McPherson struts on it, and you say, well, why would they design it in such a way and then charge so much money? So a lot of the expensive cars have crappy parts on it. Not all of them, but some of them do. Arrange your financial life in a way that a bad investment here and a missed financial goal there won't wipe you out, so you can keep playing until the odds fall in your favor. That's really the market conditions that come in favor to your investments. Um, what I see is I see a lot of people, they just don't have a lot of cushion, and I don't know if it's probably a lot of it's probably from the decisions that they make. I remember talking with someone at work, and he was like, I'm going to trade in. He had a brand new, basically a brand new truck. It was like a year or two old. He's like, oh, I want to trade it in and get another new truck. And the trade-in values, I guess, were really good on the Toyota trucks. So he has a Toyota truck and he wanted to trade it in and buy another bigger Toyota truck. It was like a Tacoma into a Tundra. And I was like, well, I probably wouldn't do that. But again, I wouldn't have bought the first new truck to begin with. And I said, well, it depends. Do you have an emergency fund? He's like, oh yeah. I've got an emergency fund. I've got $2,000 saved up. And I'm like, that's an emergency fund? $2,000, really? I mean, you should put a zero on the end of that at a minimum. He recently bought a new house and he was driving newer cars and stuff. So I was like, man, $2,000, you're literally like you're barely making it, man. Like you are spending way too much. You need to cut that way back. You need to be driving a car like that I would drive. But I guess people don't want to do that. They want to buy the new stuff. So that is where that's an extension of I guess that person and what they value and what they want, and I would feel completely and utterly be crapping myself every night if all I had was $2,000 saved in the bank, I would be like up at night worrying. Uh, So I don't know. I think it's just different personalities. The personality traits, or maybe how people handle money. Rule number one: most things will prove to be cyclical. Rule number two: some of the greatest opportunities for gain or loss come when other people forget rule number one, when things are mainly cyclical. Millennials feel broke despite rising net worth. I don't think net worth is really what it is. Price their net worth in gold and tell me that they feel rich. Go back to the 1970s, see how much those incomes were priced in gold, and then tell me what the incomes are today priced in gold. I guarantee that the gold ounces that people are earning today are far less than the gold ounces that people were earning back in the 70s. So that's why I think they feel broke, is because they are broke. And you're measuring it in net worth that is measured in dollars, and the dollar is tanking. So your net worth doesn't necessarily matter pricing it in dollars. Price it in something else. Price it in barrels of oil. Price it in ounces of gold. Porter Stanberry says Bank of America is sitting on $700 billion in bonds bought at 1% yields in 2020. Those bonds are down 40%, hiding $100 billion in losses. Meanwhile, the Treasury needs to refinance $9 trillion and issue $2.5 trillion in new debt this year. Foreign buyers like China are dumping treasuries for gold. If Trump disrupts this debt recycling, we're staring at a failed auction or Fed QE that'll spike inflation expectations. When yields hit 7 to 10%, Bank of America's equity won't survive. A run on the bank, ATMs down, it's not if, but when fractional reserve banking fails, it's built to. See 1932. Now, 1932 was a problem with bad loans in the system from real estate. I don't think we have that. But a lot of these banks did load up on these treasury bonds, and the treasury bonds are way down. If they sell them, they'll realize the loss. So maybe they just hold on to them for a very long time and wait for them to basically time out, but they're still going to eat total losses on them. All eyes on the White House. Something real big is circulating regarding nuclear power in the United States. And what this is that swift and decisive action is required to jumpstart America's nuclear renaissance. The biggest nuclear policy change in U.S. history is about to be unleashed. So that's something to watch. OPEC crude oil production for April of 2025. Let's see what's here. So OPEC production is down from July of 2022 quite a bit, and we're down a few million barrels, about 2 million. From 44 million down to about 42-ish million, maybe slightly less than that. So about a 2 million barrel per day move lower. Production quota, yeah, right around the quota. Production in Russia is down. We're down around about a million barrels from 2021-22. Iran, it's been creeping way up, moving on up and up and up from 2020. Venezuela's up, Kazakhstan's up. These guys are all cheating, I think. And then Iraq is down a little bit, and UAE is, it's down slightly. So most places, they're down slightly. Other places have really pushed production, like Kazakhstan, Venezuela, and Iran. There's probably 2 million barrels, maybe spare capacity in the system at best. Brian says money isn't the goal, freedom is. Money is just a tool. Oh, so I talked about that last time. So we're going to stop it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Use specialist coupon code, and we've got that Sunday question and answer session. I'll go over, I think, a couple companies. One that everybody kind of wants me to go over. So I'll go over that one, and maybe we'll go over a couple more. But that's what I've got for today, guys. So we'll catch you next time. This is Finding Value.